Real estate investing isn't about finding the perfect property, it's about building the perfect team. Because if your team sucks, even the best deal will fall apart. The difference between a profitable investment and a money pit often comes down to your accountant, your lawyer, your realtor, and even your property manager. Get this wrong and you could face audits, lawsuits, cash flow losses, or even a complete meltdown of your deal. Trust me, I learned this the hard way. Let me take you back to one of my very first deals. Actually, it was my first deal ever. I was all excited. I had just partnered with 3 friends to do a flip. We went out looking at properties right away, no planning, no team, just vibes. We found a house, we made an offer, and it got accepted. And then we sat down and did the math. We forgot to factor in capital gains tax, realtor commissions, and even the value of our own labor. I mean, we didn't even factor in hiring trades. We were going to be doing everything. Now, if everything went perfectly, we'd maybe break even. And that was without the capital gains and the realtor commissions. So, and then what do you have to split? What are we splitting later, right? And that's with us doing all of the labor. None of us knew how to renovate, paint, or even install a doorknob. Needless to say, we found a way to kill the deal, thank goodness, but it was a wake-up call for me. So I think what I would say is don't do what I did. I'm doing these podcasts to teach you, and hopefully, my experience is going to, give you guys a little bit further insight and accelerate your path compared to what I did. I then went and found my realistic power team after. And I mean, you know what? You make mistakes, and that's why we do these things, to make sure that I'm going to be able to give you the benefit of my experience. So you want to build your real estate dream team before you go hunting for deals like I did. Now let's break down exactly who you need and what to watch out for. Accountant, we mentioned that, okay? This is your financial foundation, okay? What can a good accountant do for you? Well, he's going to advise you on the structure, okay? Are we going to go buying these properties personally? Are we going to put it into a corporation? Who's going to own it? What are the tax strategies there? Are there going to be tax deductions? What can you deduct? Capital cost allowances, carrying forwarding losses, depreciation. All of these things are things that I didn't even know. I had to learn these the hard way. A good accountant can help you, legally reduce taxes through depreciation, interest deductions, all of the other expenses, and then reinvestment strategies. I mean, that's really why we're in real estate. They also prepare you for any capital gains impact to minimize those, kind of roll those over, maybe make sure that your exit strategy is going to be okay, and then prevent audits before they happen. Now, what can a poor accountant look like for you? Not to say it's a bad accountant, but maybe it's one that only handles personal taxes. Maybe they've only done your personal taxes and they have zero real estate experience or zero real estate clients. So you need to ask those questions. Maybe they don't understand capital expenses versus current expenses, okay? Capital versus current. So we're talking about, improvements to the building structure versus maybe just painting. I mean, that's a good question. Is changing a light bulb considered current or capital? And honestly, it kind of depends on how long the light bulb lasts, if you can believe that or not. Is changing flooring considered an upgrade or a repair? These are all things that a good accountant should be able to do. You don't want them to be misfiling things, which also puts you on, your tax, whether you're in Canada, so Canada Revenue Agency, or you're talking about in the United States, right? You don't want them to miss any key write-offs. So a poor accountant is going to miss those write-offs, which is basically now you're paying more tax than you need to. So key write-offs and deductions. And the worst is they're too aggressive, or they don't know what they're doing, and they trigger an audit for you because they miscoded the renovation work. Another poor accountant, I've gone through, I don't want to say dozens, but you know what? Over 27 years, I think almost a dozen, ones that offer no proactive advice. They just file your return after the fact. Okay, so what questions should you ask your accountant? Okay, number 1, how many of your clients are real estate investors? Number 2, what's your experience with cost segregation or capital gains planning? Number 3, can you help me model out different scenarios for ownership structure? So a pro tip here, a good accountant won't just save you money, they're gonna save your deals. So pay them what they're worth. Okay, second pro on your team, the lawyer. This is your legal lifeline. Now, what can a good real estate lawyer do for you? Number 1, They're going to handle your purchase and sale with full legal due diligence. Now, when we say due diligence, we're not just talking making sure they're protecting you. It could be that you're going after a multifamily dwelling. Are they able to search or know that they need to search for rent control guidelines? Environmental. There could be engineering things that they have to look at, past liens on the property, things to do with land titles, other mortgages. I mean, there's just a whole plethora of things there, okay? They have to understand land titles, like I said, liens, encroachments. You don't want to get sued because the building is 2 inches past the neighborhoods or even the neighbor's property line. Okay, they should be advising on structuring joint ventures, protecting personal assets. They should be able to actually, if you're going into any kind of those joint ventures and it's going into a corporation, what does that look like? Partnerships, contracts, unanimous shareholders agreements. They should be reviewing those. They should be explaining those, explaining how to protect your personal assets. And then commercial leases. If you're going into commercial, a good real estate lawyer is going to be able to review every lease, maybe even draft those leases for your commercial tenants. Now, what does a bad lawyer look like? And I'm not going to say bad. What does an inappropriate lawyer look like for real estate? Well, let's say it's your family lawyer who did your will or your divorce. They don't know what a trust condition is. Maybe they've never done real estate before. They could know what they're good at. Maybe they're a good litigator, but they're not good in real estate. Can they turn around that property quickly enough? Like a good real estate lawyer is doing dozens and dozens of closings every single month. Okay, their whole team is wired for this. Your family lawyer might be able to do a real estate deal, but maybe it's going to take 6 weeks longer. Maybe now you're paying penalties. You're certainly going to be paying more in legal fees because they're now going at their own pace. It's not something that they're used to. It's not in their wheelhouse, okay? They might miss registration guidelines, deadlines, zoning regulations, lender requirements for mortgages. A poor lawyer, of course, this is with all the pros, won't return your call for 3 days when you're trying to waive conditions, okay? So what questions should you ask your lawyer? Number 1, how many real estate transactions have you handled this year? How many real estate transactions have you handled, okay? In the given year, in the given month, okay? That'll tell you the volume and what they're used to and how busy they are, okay? Number 2, do you work with real estate investors regularly? Number 3, can you help me draft a joint venture or partnership agreement? So another pro tip, it's not just about closing the deal, and any lawyer could be able to do that. It's about protecting your downside, your assets, your liabilities. So find a lawyer who knows investment strategy, investor strategy. Okay, third pro on your dream team, on your real estate dream team, your realtor. You can almost call it your market intelligence agent. What can a good investor-friendly realtor do for you? Number 1, understand cash flow, cap rates, and value add opportunities. Have they actually invested in rental properties themselves? Can they walk the walk as well as talking the talk? Now, I'm not saying that a realtor has to actually own investment properties, but honestly, if you're a realtor and you don't own investment properties, you kind of have to ask them why, because they have an advantage. They can buy things off market, they can buy things first on the market. So if a realtor doesn't invest in rental property, to me, that's kind of a warning sign that they either don't believe in it or they don't know enough about it, okay? Do they know the neighborhoods? Do they know the tenant profiles? Do they know their rental comps? Okay, they should know those cold. Or if they don't know the rental comps, they should know where to get those, like partnering with a good property manager. Can they find deals that are off market or early in the listing cycle? Can they find expired listings? Do they have pocket listings that a good realtor is going to know and have a lot of investors there's going to be things coming up for them, and then they're going to be able to give those opportunities to you. Now, what does a bad realtor look like? Okay, well, maybe they sold you your first home, and maybe they only sell dream homes and luxury listings. They can't tell you the expected rent or operating expenses on investment property. Maybe they don't even know how to calculate cash flow. Maybe they're giving you the absolute top line rental income and net profit, and they're trying to talk you into the property that looked nice, but these things are bleeding cash. Maybe they don't understand duplex zoning, vendor takebacks, private financing, seller take-back financing. So what questions should you ask your realtor? Well, number one, do you personally own investment properties? I went over that quite a bit. Number two, how many investors have you helped this year, this month? Again, that gives you an idea of the activity. You kind of want an investment specialist as a realtor. Okay, number three, can you help me find off-market or underperforming properties? So my pro tip for this is a good realtor is kind of like a sniper, but a bad one is just a tour guide. You don't want somebody that's just going to send you emails and open the door and have you make those decisions. You want to make sure they're not just trying to close a deal, they're actually helping you build wealth. Okay, the fourth pro, your property manager. Now, you don't actually have to hire a property manager, but you should still have one on your team, okay? Because your operations really arm what a good property manager can do, okay? Understanding landlord, tenants, laws in your region, landlord-tenant laws, being able to screen tenants for you, either because you've hired them, or maybe they can screen your tenants for you, either for free or for a cost, even if you're self-managing. Advising you on market rent, what the vacancy risks are in that neighborhood, tenant profiles that might be renting there. If you're hiring them, they can handle maintenance, showings, after-hours emergencies. Now, my favorite part, because I am a property manager, or rather I own a large property management company, what does a bad property manager look like? Well, biggest complaint in the world. They don't return tenant calls. They don't return your calls. They accept any warm body as a renter. I'm sure all of you who are watching this have either heard of or have experienced this. They fail to follow up on unpaid rent or lease renewals, costing you money, charges you for repairs that never even happen or unauthorized repairs. So I'm going to be going into how to hire a property manager in the next episode, but just a few questions just to end off this episode. Ask your property manager, what's your eviction process look like? How do you screen tenants? Do you offer rent evaluations before I buy a property? So a pro tip here, even if you don't use one right away, get a property manager in your corner. They're going to help you avoid bad buys and step in when you scale. So in summary, real estate isn't just about bricks and mortar. It's about the people in your corner. Your dream team is the difference between grinding through every mistake like I did or confidently growing your portfolio. So if you like this type of content, I would invite you to click the link in the show notes. We've got our free 7-step guide on how to purchase a rental property properly. And in that, of course, you're going to get access to our email list and some of our other content that we email out you for free. Thanks for watching today.